Okay. Hello, everybody. Good morning, good afternoon, and good evening. Welcome to our Climate Bonds Initiative webinar on green finance in the offshore wind sector. We are very pleased to be hosting this session, and thank you very much for joining our event. My name is Carmen Mack, and I work on the certification scheme at Climate Bonds Initiative. I'm your host today, and I will be moderating the session. Our webinar will last for an hour and a half, so it will finish at 12:30 Paris time or 11:30 London time. Please note that all our participants are automatically muted, and you can type into any questions or comments into the Q&A chat box on the right side of your screen at any time. The Q&A chat box should come up from the menu bar if you can't see it. And then we will gather these points for a discussion after all the speakers have given their prepared presentations. Now, please allow me to introduce our panel of speakers in the order that they will be speaking in. It is our utmost pleasure to introduce to you our 5 speakers for today who will be sharing their insights and experiences for the next hour and a half. First, we are joined by 2 colleagues from Natixis, who is a leading bank in structuring green finance structures in the energy sector. Stefan has been at Natixis for the last 10 years with different roles relating to structuring and originating project finance in the energy and infrastructure sectors. He currently is head of the EMEA Power and Renewables Infrastructure team. Julien has 20 years of experience in structured finance and public development aid at different roles at Natixis. He joined the Green and Sustainable Hub when it began 3 years ago to focus on originating green and sustainable bonds, loans, and cross assets. They will be discussing market trends in the offshore wind sector and the role played by green finance. Next, we have 2 colleagues from Energy Baden-Württemberg, or EnBW. EnBW is one of the largest electric utilities in Germany and have so far issued a certified climate bond in each of the past 3 years. Regina has been working there as a sustainability manager since last year. She previously worked on sustainability ratings at ISS ESG, or formerly known as ISS Oakham. Robert joined EnBW 10 years ago, and since 2013, he has been in the capital markets department. He worked with the corporate sustainability department to introduce green finance to EnBW in 2018. And we have Robert from Eurogrid, one of the large transmission companies in Germany, and who issued a green bond for the first time in May this year. That bond was used to finance the development of 2 offshore wind connections in the Baltic Sea. Robert is head of treasury at Eurogrid and a subsidiary 50Hertz. He has been working in the energy business since 2004, initially at CCC Berlin, a company with high voltage cable projects, then in the photovoltaic industry at Solon SE, before joining Eurogrid and 50Hertz as head of treasury in 2011. He will speak about Eurogrid's experience of issuing their first green bond this year. After the panel have finished their presentations, we will have 20 minutes for a good discussion, exploring some of the points they've raised and any questions you may have. So I will now begin by briefly mentioning some trends in the offshore winds and green bond market. We are holding this webinar today because we've seen some exciting trends and opportunities in the offshore wind and green finance. For example, a few weeks ago, the UK government announced a new target for offshore wind capacity by 2030 of 40 gigawatts. This compares with the current installed capacity of 10 gigawatts in the UK right now. Globally, 10% of wind installations are offshore, and there's scope for much more growth in the coming years. Earlier this year, Siemens announced their new 14 megawatt turbine, which is the biggest so far. That is huge compared to what was available just a few years ago. And that's really going to help drive much bigger wind farms across the world in the coming years. And this year, we've also seen new floating offshore wind turbine installations, which will help develop wind farms in places where the seabed is too deep and it's not good enough for conventional turbines. Here's a photo of such a floating turbine. Here's a graph from our data showing the number of green bonds linked to wind energy over the years. as well as the number of issuers with those bonds. The green bars shows the number of green bonds issued for wind energy, and the red dots showing the number of issuers who have issued those bonds. Generally, we're just showing here a growth in these numbers, and definitely we'll be seeing more of these. So for the remainder of our presentation, I will briefly introduce our certification scheme and how it is useful for offshore wind and other green investments. The certification scheme was launched in the end of 2014, and it was set up in order to show best practice for the green bond market, which was very new at the time. The scheme is set up to encourage as much disclosure as possible, which is highly appreciated by investors. It is fully aligned with the green bond principles and green loan principles, and it is also aligned with many of the regional guidelines around the world. It is the only certification scheme for green bonds and loans in the market, and it is comprised of assurance procedures as well as requiring annual reporting throughout the term of the bond or loan. The assurance is conducted by a network of verifiers that we approve and manage, and the requirements for certification include certain criteria that we have developed, which ensure that the projects and assets financed should contribute towards a 2 or 1.5 degree world as mentioned in the Paris Agreement. These criteria requirements have been developed for the sectors as laid out here, so we can provide certification in these areas. Of these sectors you can see here, one is marine renewable energy on the bottom right corner, which covers offshore wind, which is the topic for today. I will go into this criteria in a little bit more detail later, but let's briefly look at how certification fits into the green bond market first. As of the end of September, we have provided certification for 140 billion US dollars worth of bonds and loans since the beginning of the scheme. So this line here is showing the cumulative total of all the certified transactions that have received certification. This cumulative total is split across 280 transactions and across 140 issuers around the world. In 2020, this year, certified issuances have represented 24% of the green bond volume issued around the world, and that's something we're very happy about. And so this line is showing growth. As the green bond market has grown around the world, the certification volume has also grown as well. And this is a world map showing the countries where certified issuers have come from. The blue countries are where we have worked with issuers on certification, and we have a good reach across the world. We particularly have a lot of presence in Asia, in China, Japan, India, also branching out into Southeast Asia. We have a good presence, very good presence in Australia. We're also quite popular in Europe, in Northern Europe as well, particularly. We also work with many municipal issuers in North America, in US, and we have many energy projects in Brazil and other parts of South America. And the countries that have stars are the countries where we work with the government on their sovereign issuances. So back to the marine renewable energy criteria. So marine energy criteria is the one we use that covers offshore wind. The tables here, without worrying about the text, is showing the types of investments that we can provide certification for. So this includes offshore wind, offshore solar when that happens, tidal, wave, and other possible technologies such as ocean current or some of these other more innovative technologies out there. We also can provide certification for onshore facilities such as factories that are producing the turbines for offshore wind, and other infrastructure such as the vessels that are used in installing offshore wind turbines. We recently provided certification for the first bond that was issued for financing offshore wind turbine installation vessels, and that bond came from Japan. Now some briefly details about the criteria structure. You can see here that the criteria is mainly composed of 3 components. The first one, that's the disclosure component, which requires the issuer to disclose some basic information about the projects. Next, the mitigation component, which all offshore wind generation should automatically meet, as long as they're not bundled together with some fossil fuel generation assets. And finally, there's the adaptation resilience requirements, which compose of a checklist that the verifier needs to complete to ensure that the offshore wind facilities have plans to mitigate certain climate impacts, such as increased storms, other environmental impacts, such as the local ecosystems, or impacts on local coastal communities, for example. Further detail of our marine renewable energy criteria can be found on this website at the bottom, or do get in touch with us if you'd like to find out more later. And finally, here's a table showing the issuers that we have worked with, who have issued certified bonds or loans relating to offshore wind. There are 13 issuers listed here. They include banks, companies in the electricity sector, as well as the Dutch government. The issuers highlighted in blue with 3 asterisks, Energy Baden-Württemberg and Eurogrid, have speakers who are with us today, and Kincardine Offshore Wind Farm is a transaction that Natixis worked with, and they can speak more about that later. With that, I will now turn over the discussion to Stéphane, who will briefly describe the offshore wind market trends and opportunities. Thank you.
Thank you, Carmen. Thank you, Carmen. Can you hear me? Okay. Can you hear me? Yeah? I don't hear you. Okay. Sorry about that. Good morning, everyone. So if you can hear me, that's working fine. I guess I will have the pleasure to describe some key trends from a lender standpoint with respect to the offshore wind. Natixis has been active in the offshore wind sector for almost 8 years now, mostly in Europe. But recently, we've been active as well in the APAC region, and we've been active as well, and we are closely monitoring the US offshore wind promising sector. I'm working for the industry group, so I do have the perspective of both the lending activity of Natixis in that sector and the definition of the lending policies in that sector. And as well, we are closely working with our network of M&A boutiques with respect to equity investments in that sector as well, which is interesting to underline the few underlying trends of the sector. So I guess it's a promising sector. It's even more promising in a post-COVID context with the various stimulus packages pushing strongly the green momentum, no surprise to you. But I guess before COVID, it was promising as well from a very sharply decreasing LCOE trend in the sector, with costs that have decreased by almost 4 over a decade on a euro per megawatt hour basis. And I guess that was a very strong positive sign that has boosted the volumes and the prospects for volumes in the offshore wind sector. From a lender standpoint, I guess that decrease in cost is at the same time a good aspect, but at the same time an aspect of caution in terms of long-term sustainability of operations when the costs are going so low. I guess you are aware that as of today in European offshore wind market, we are somewhat close to 45 euro per megawatt hour. This is more or less the result on a CFD basis of latest auctions, which is somewhat even smaller than the latest recently announced auctions in the onshore renewable sector, at least for Europe. So it's a market that is quite big. I guess Carmen provided some figures earlier, but we do anticipate sustained growth by the end of the decade, and with a relatively increasing share of offshore wind within the global wind installation on a yearly basis. To give you some figures, we are today in the range of 6 gigawatt, and we would expect on a yearly basis 15 to 20 gigawatt to be installed by the end of the decade, which would represent roughly 20% of the overall wind installations. Overall investment volumes are significant in the offshore wind sector. That's why it's driving key questions in terms of liquidity and key questions in terms of bankability to attract that liquidity. But very good momentum, generally speaking. I guess the key markets are still more or less the same. One market is very closed, and I guess it's a very internal market and domestic market. It's China, which we would expect even after the UK announcements should remain the #1 market in terms of volume by the end of the decade. But indeed, the following markets will be the UK in terms of offshore wind and expected installation, minimum 25 to 40 gigawatt installation by the end of the decade. Then we would anticipate Germany to be a significant market, Netherlands, Taiwan, which has started to boom, the USA, and France. But within the bank, we monitor closely as well new promising markets beyond those, I would say, usual suspects. I guess we monitor closely the announcement of Japan, particularly in the floating offshore wind space. South Korea with significant announcement, 12 gigawatts, that's not negligible. And as far as Europe is concerned, Poland with interesting prospects there. And potentially as well in the emerging side, some developments in Vietnam, in India have been announced, one development in Australia. So I guess less mature markets, but which could become promising at some time. One of the key trends that we've been observing beyond that geographic expansion and the sustained growth in terms of volumes is as well the development of floating offshore wind. And I guess we had that experience on Kincardine that Carmen mentioned during the introduction. Floating offshore wind, we see it as having a strong potential, but even though as of today, the market or the identified market at stake has nothing to be compared with offshore wind. But overall, if we compute all developments all together, we would be in the range of 12 gigawatts. So floating offshore from a lender standpoint is raising new questions and new challenges, most notably in terms of track record and in terms of multiplicity and highly diversified technical floater solutions that are available in the market and which would require tailor-made due diligence for each specific technology solutions being selected. But we see that as promising, in particular in certain key markets for which installation in shallow waters is not permitted, and particularly in France and in South Korea and potentially West Coast US. The key drawback today of floating offshore wind is the cost. It's as of today in the range of 180 to 200 euro per megawatt hour. So that's quite significant and would still require heavy amounts of subsidies. But we think it should aim at something closer to 40, 60 euro megawatt by the end of the decade, particularly in those markets that have expressed or have announced in advance the launch of various auctions, in particular France with potentially up to 2 gigawatts of projects being announced in the French market. On the bankability side, the key trend we observe, well, offshore wind and bankability of the offshore wind today has nothing to do with what it was 7 years back. It's a sector that benefits from very massive liquidity. It's a highly, I would say, borrower-friendly or sponsor-friendly environment in terms of optimizing terms and conditions. So that's very liquid and very positive and huge amounts available. That's also reflected not only on the debt side, but on the equity side with particularly sharp pressure on the target returns, which as of today do not necessarily provide any premium as compared to onshore renewables. And that's something that didn't exist a few years back when offshore wind was still perceived as a complex technology from investment and lending case perspective. But I would say the key trends today and something we monitor closely is being pushed by that grid parity situation, which has exposed an increasing number of projects to potential merchant exposures. And I guess in that respect, we monitor closely how discussions, particularly in Europe, would evolve around auction designs and whether two-way CFDs or certain price signals would allow some form of contracting for projects, even though they have reached a grid parity stage. And I guess that's a debate that is particularly relevant for the German offshore wind sector. And discussions are taking place in that respect in terms of most suitable auction design. I guess another key trend that is raising bankability question today is on the O&M side with, again, under the incentive of sponsors and an increasing number of players willing to take a role instead of turbine suppliers on the O&M side, the reduction of O&M offer in terms of duration, and an increased risk of corrective maintenance being shifted at the borrower level. So that's a trend that is quite reflective as well. And I think another key trend, it's also, and it's important for us, a bank, it's how our client ecosystem is evolving in the sector. And I guess we had the usual players, which were, of course, the utilities. We had as well some independent power and renewables operators in the sector. But the entry into that market, rather the aggressive entry, if I want to qualify it, of oil and gas players is quite significant. And they have taken position both at development stage or at brownfield stage in the sector. Recent moves being taken by Total in the floating and fixed offshore wind space. Recent move being taken by BP and Equinor in the US offshore wind sector. I guess that represents a client segment which we are monitoring very closely because it's someone reshaping the ecosystem and competitive environment. I will hand over to Julien, my colleague from the Green Hub, which can describe more our past experience also in offshore wind.
Sure, thanks, Stéphane. I hope that you can hear me correctly. And apologies in advance if I have some issues with my internet connection. I'm on my phone, but hopefully that should be working correctly. So I'm Julien from the Green and Sustainable Hub in Natixis. This is a team which is a cross-asset team and dedicated to foster the sustainable features and business in the CIB, and I'm particularly focusing on all sustainable solutions, green bond, green loans, sustainability-linked features in general. And we do work with Stéphane and the rest of the teams internally for all sorts of projects with banks, with SSAs, with multilateral development banks, and obviously we've seen a growing interest into the project finance world, and we are starting to work with certification schemes as CBI in the loan space, which is getting a little bit more standard and matured compared to the bond market, which is obviously today very, very standard. Maybe a quick word, and Carmen, if you can just a quick word to step back a little bit and maybe come back on the key things Stéphane mentioned about the bankability, I would say the liquidity issue for this wind offshore market. Just to remind what is, if we just want to filter a little bit the I would say the main rationales for from a green finance standpoint, what would be one, the context, which is on this slide quickly. I would say the change of paradigm, this reallocation of savings we are seeing. A lot, of course, of change in the regulatory environment. And obviously, especially in Europe, but not only in Europe, a new, I would say, setup with I would say, political and government support in that direction, especially with the Green New Deal in Europe, which is obviously opening up some opportunities in all those projects. Not to forget, of course, the fact that there is a strong demand from the investors as well. This is particularly true in green and social bond, for instance, market. And this is something which we would foresee definitely some interest from a green, social, and sustainable standpoint into the loan market as well, more into the alternative asset pockets. Maybe next slide, Carmen, if I may ask. Yeah. Just coming on the rationale and the main expectations, just to recall that the main, I would say, main drivers on the back of what I mentioned, this growing, of course, standardization in the market, the fact that there is a pressure on a lot of business models, and Stefan mentioned some oil players entering into this market precisely. The regulatory environment I mentioned earlier on. All this, I would say, serving the main rationale for the sustainability finance, precisely to, I would say, put in motion the sustainable strategies with the funding and the equity stories, and on the back of key rationale that we have framed on this slide. Just to recall that the main rationales for investors are the transparency and the search for impact, and the reporting, of course, and the additionality. And we will see that the Cbi certification scheme, as the standards provided by the ICMA and the green loan principles from the LMA, are precisely designed to offer, I would say, governing principles in that respect. So transparency and impact. We are seeing, of course, issuers, and we will have some discussions a bit later on that front as well, looking for new, of course, leverage in terms of communications, but more importantly, to meet this fast-growing investor demand. And obviously the lenders, as Natixis and some others, which are, I would say, shifting their business model. We, Natixis, have implemented a green weighting factor. So we have an internal tool to monitor and foster the generation of greener activities gradually. So this is something which is shared across many banks and many of our good fellow colleagues and other banks. Quickly, I mean, this is something which is, again, looking for and leveraging from those standards, looking for the best integrity, the best measurability and auditability when it comes to impact. And that would be the key theme. Reporting would be I would say the end game that we will look for, and that's where any sort of certification scheme, again, on the back of growing standard in terms of taxonomy, with the EU taxonomy, for instance, would be a very important topics. Maybe next slide, Carmen, please. Thanks. Just a quick overview on, I would say, this fast developing market. This is consolidating data across all, I would say, products and region. You can see that Europe is definitely leading the way still, but not leaving aside the APAC and Americas. So this is, I would say, still the trend to be seen in the market. And on the left side, what is really interesting is to see the fast developing sustainability-linked theme. This is the red diagram into this on the left side on this slide. We are seeing, of course, this in the loan space for the last 2 to 3 years. We are seeing this in the public bond space as well, with the few public bond issuance sustainability linked that we have seen on the back of the new standard from the ICMA, the sustainability linked bond principles. And we are seeing, obviously, this green loan as well, fast developing, which is a mix of, I would say, pure players over the last few years, especially in the infra and renewable space. And that's where we will discuss further down this discussion, the merits to get, I would say, some governing principles, even for pure players, as it will offer, I would say, key inputs for the investors, which are getting organized around those impact thematics I mentioned. Maybe next slide, Carmen, please. Thank you. This is a snapshot. Stefan mentioned, and Carmen as well earlier on, these transactions, which was the very first in this space for this market, and especially for the Cbi. This was the first Cbi floating offshore wind project. sponsored by a Spanish company that you probably know, Cobra. This is something which was done quickly this year on the back of discussions we had with the sponsor. This is a project finance type of transaction. This is a term loan, and I think this is something that we can discuss. And Carmen mentioned that CBI is opening up for the last year and more this instrument and format as well. We are of the view that this is paving the way for lots of opportunities, again, to frame, as I mentioned, pure playing. This is in this instance, this was the first in this floating offshore market, but this is something which is as well opening up the stance for project finance as well, where we would leverage from a certification scheme as CBI to put forward the merits of the project. Again, in this instance, this is a 50 megawatt floating offshore wind farm located in Scotland with 6 turbines, some already installed, some to be built. And the end game, as you probably know, and this was presented by Carmen earlier on, is to frame this according to the certification scheme, using Vigeo Iris as an approved verification company and verifiers in this instance, and again having this reporting embedded into the transaction, just to put forward the merit of the company from a sustainable standpoint, which are the typical, I would say, KPI that we would expect in this instance. Of course, one around the allocation of the proceeds and the progress report of the projects, and the impact reportings as well around the CO2 being avoided. I would say all the megawatt and kilowatt per hour being produced as key output of the project. I will pause there maybe and give you back the floor, Carmen, digitally. And I would be more than happy to answer any sort of question, just to bring forward these two expertise, project finance and sustainable finance, which are really having, I would say, common goals today.
Thank you, Julien and Stéphane. That was quite interesting. I have prepared a couple comments in response, but I will mention them after. If any of our audience would like to say anything about those materials, please do type it into the Q&A box, and we can gather them towards the end. So now we will hand over to Energy Baden-Württemberg, EnBW, where Regina and Robert will speak about their corporate sustainability strategy and how their green bonds, the 3 green bonds issued, have fit into that. So with you, Regina, please. Thank you.
Thank you. Can you hear me well?
Yes.
Okay, perfect. So good morning or good afternoon, everyone. I would like to start with a brief introduction of our business portfolio. So we are based in Germany and active in 4 business segments along the energy industry value chain: in generation and trading, renewable energies, grids, as well as sales. Until 2012 and the events of Fukushima, we were a traditional energy utilities company with more than 80% of power generation coming from conventional power sources such as nuclear and fossil fuels. In 2013, however, with the implementation of our strategy 2020, we started to transform our company in order to support the energy transition. Since 2012, we have increased the share of our renewable energy capacity from 19%, with the goal of achieving 40% by the end of this year and 50% by the end of 2025. We have started to issue green bonds in October 2018 and have since then issued 3 green bonds in total. Next slide, please. From our home base in Germany, we have started to explore international market growth fields with regard to renewable energies. Starting in Europe, where we have, for example, acquired Maleco, a French producer of solar and wind power in 2019. We have also entered the US and Taiwan market in order to explore market opportunities with regard to wind offshore. Next slide, please. With regard to sustainability, I would like to mention that we don't have a separate sustainability strategy. Instead, sustainability is part of our corporate strategy, which is based on our assumption that the financial and sustainability topics are closely linked. We understand sustainability as creation of economic as well as ecological and social values for all of our stakeholders. That means that sustainability is integrated in all key company processes, starting from the corporate strategy, further on to target setting and corporate management, but also to corporate financing, such as over green bonds, and also the risk management and stakeholder management and communication. Next slide, please. We have been active in several sustainable finance initiatives for some years now, starting with the International Integrated Reporting Council and the TCFD, and more recently also in the EU Technical Expert Group on Sustainable Finance and also the German Sustainable Finance Committee. Our efforts with regard to sustainable management have been valued by sustainability rating agencies. We have been able to maintain or even improve our rating results in recent years, which is kind of an important issue for us also when it comes to further efforts such as the issuance of green bonds. Next slide, please. When we decided to issue the first green bond, it was very important for us to have already before implemented certain sustainability structures in our company, as we felt that it would be quite helpful, especially with regard to measuring the impact. On the other hand, we can say that the issuance of green bond has had positive impact on us. It has helped us to achieve a positive impact on sustainable development goals and also on our own non-financial KPIs, for example, on the expansion of renewable energies and also on the decrease of our CO2 intensity. Next slide, please. Our experience with green bonds is aligned with recent numbers on the green bond market. In 2019, the energy sector was the largest use of proceeds sector. Within this sector, the largest share of use of proceeds went to renewable energies. In this sense, you could say that green bonds are supporting and financing the energy transition. With this having said, I would like to hand over to my colleague Robert, who is going into the details of our green bonds and also the corresponding process. Thank you.
Yeah, thank you, Regina. So on this slide, you see EnBW's issued green bonds and their respective allocation. The allocation of project categories give a good picture of EnBW's business activities and about the CapEx distribution. With the unallocated proceeds from the July 2019 issuance expected to be allocated towards the offshore wind, more than 1 billion euros more than 1 billion euros or 50% of the issued green bonds proceeds will be allocated to offshore wind projects. One further aspect to highlight here, this year we used the green bond proceeds to refinance an M&A transaction. EnBW acquired a French onshore and PV developer it is a pure play green energy company. The company consists of wind and PV assets in operation, as well as a large pipeline. On the next slide, I would like to share a few experiences when issuing a green bond with you. So having issued our first bond in October 2018 doesn't mean that we first looked at the market in 2018. So we were following the market development since 2015 already. However, we have not felt ready to be a credible green bond issuer back then. So in 2018, the execution of our strategy was well on track, and we also established some kind of track record. So we felt at that point in time that it would be the right point to issue our first green bond. So basically, at the moment, we are still following the developments. We are looking at the EU Green Bond Standard and how to align our reporting with it. And yeah, we are confident that there's not a lot to do to comply with it. So as you see on the slide, there are potential eligible project categories in our core business that are mostly obvious, and projects are easy to identify. However, some are more attractive than others in their inclusion to the green bonds. For example, for wind offshore projects, it's easy because it's a large project with a lot of capex, and it's easy to identify, and most of the reporting indicators and relevant information is at hand already. However, limitations apply when considering project selection, for example, in the wind onshore space. We have partnering models in place where we have a co-investor that owns a larger chunk of the project already. And as well, for some projects, we include a citizen participation. So they have a very small share of the project as well. This has to be considered. Also, potential farm downs and some uncertainty in project development in the implementation phases, such as lawsuits and some, there are some ways that could stop a project from being implemented. This all has to be considered. Also, changes in business models and strategy, for example, on our e-mobility, which is also very early stage projects that need to turn out. Still could also potentially harm the inclusion in a green bond. Also, small-scale expenses such as smart meters and small PV can give you some headache. The impact reporting has to be kept in mind when thinking to include these projects. Just for example, when we issued our first green bond, we included the e-mobility charging stations, and for a certain for certain charging stations we didn't have the reporting indicators at hand. We are looking here at the number of charging processes, and the financed charging stations now have to report again for the reporting to the numbers. So it had to be set up. And this can be more time consuming than you initially think of. So on the next slide, you see the issuance process of a green bond. And the process differs a bit from those of conventional bonds. So the third and the fourth step, so marketing and transaction, they are more or less the same than for a conventional bond. I talked about the preparation a bit and things to consider. And now I will spend a few words on the implementation of the process and framework and reporting. So on the next slide, you see it outlines our green financing framework, basically. I guess everyone is familiar with the green bond principles, and our framework, as most others, has been prepared in accordance with those principles. So I would like to highlight here our process for project evaluation and selection. We developed a criteria set for project evaluation. It is used to consider for the consideration of the project's contribution to EnBW's non-financial key performance indicators, the SDGs, and the Global Reporting Initiative. And this forms then the basis for the project selection. We also established a Green Financing Committee, and this committee oversees the overall process and gives guidance and takes all the respective decisions. It has proven to be of value to bring all those stakeholders together every once in a while. Its main obligation throughout the year is to monitor investments and the allocation of proceeds. On the next slides, I will spend a few words on the reporting. So for the impact reporting, we try to make it as clear and as transparent as possible. The reporting is split in the allocation and the impact report, and each project's generation share attributable to the bond is visible. The generated electricity for the project category is then converted via a CO2 avoidance factor to avoided CO2 emissions. The CO2 avoidance factor is derived from the German Federal Environmental Agency, so we can here rely on an external source with great credibility. Certain information is published in more detail than it has been before we issued the green bond and before we published the green bond impact reporting. And for some internal stakeholders, this leads to resistance, I would say. So this is also a thing to be considered before issuing a green bond and before trying to draft a green bond reporting. The next slide shows the information given in our framework regarding the reporting. We try to report on the bond's impact annually, and it is an additional report to our annual report and published on the same date. It serves as an additional way to show developments and efforts in green finance, as we include qualitative project information. To have a separate green bond report, investors can easily access required information. In our view, this provides for excellent transparency over the lifetime of the bond. And with thus having said, I would like to hand over to Regina again for looking at the SPO, the certification, and the conclusions.
Thank you, Robert. So, as Robert mentioned, when we issued our first green bond, it was very important for us to be as transparent as possible with regard especially to the green financing framework and also to the allocation and impact reporting in order to gain investors' trust. Further, we decided that we would like to have external independent verification of the allocation and the impact reporting. Back then, an external verification of our German auditors was not available to us. So we chose what was or is still considered best practice in the market. We chose two steps, two layers of external verification. As a first step, we contacted the sustainability rating agency, in this case ISS ESG, in order to compile a second party opinion on our green bond framework and the green bond itself. As a second step, we approached the CBI in order to request a Cbi certification of our green bond. The second party opinion of ISS ESG proved and confirmed the compliance of our green financing framework with the ICMA green bond principles, but also the sustainability quality of the bond itself, and of EnBW as the issuer. So this was very important for us, as I said, in order to gain investors' trust also in the field of green bonds. So next slide, please. In order to conclude this presentation, I would like to highlight on the lessons learned and also the added value of our green bond. As we have stressed before, for us, transparency is a key element. Transparency in reporting, referring to the green financing framework, as well as to the allocation and impact report. But also important is to have solid sustainability structures also before the issuance of the first bond, as it helps the process of getting the second party opinion and the CBI certificate. And it also helps to measure the impact of the green bond on company-specific KPIs, but also on the SDGs. SBOs and CBI certifications have proven to be trusted labels in the market. So we see that when we talk with our investors. It is, of course, an additional workload compared to conventional, to plain vanilla bonds, especially with the first green bond emission. But usually this time-intensive process is more efficiently over time, and the time which is needed is reduced over time. So looking forward, one element which could help us to streamline our reporting as well as our internal management process would be the portfolio approach. This is especially helpful the more bonds are issued, as it helps to streamline the whole reporting and also the internal processes. Overall, we have realized that with the issuance of green bonds, the topic of sustainability has been a very strong focus in all of our investor meetings. So I would say that nowadays there's almost no investor meetings where the topic of sustainability doesn't come up. And what's the added value for us? I mean, apart from the fact that our financing strategy underpins our transformation and our commitment to climate protection, and we have received a lot of positive feedback from various stakeholders, it also ensures our long-term capital market capability. We think that maybe in the last few years and also nowadays, issuing green bonds is an add-on, but in the future, it will be rather mandatory, and investors will expect companies to issue green bonds and to transform the company itself to be a more climate protective company, as to say. So we have also realized that green bond investors tend to be more buy and hold investors, which leads to a good performance in the secondary market. And also in general, we can say that there has been an increased demand for our bonds, as green bonds are suitable for more portfolios. So at this point, I would like to thank you for your attention, and we are looking forward to the discussion with you later.
Thank you, Regina and Robert. Thanks very much for that. Again, if the audience have any questions, please do type them in the Q&A, and we can discuss them afterwards. I will move on towards Eurogrid and Robert again, but Robert, who will now speak about his materials. Thank you.
Hello, good morning, everybody. Carmen, I would like to ask you to go to page number 3. Where I want to give you a brief introduction of the company and who 50 Hertz and Eurogrid are, because I assume that all of you have heard about Eurogrid so far. So Eurogrid is the holding company of one out of 4 German TSOs, 50 Hertz. 50 Hertz is the company who is owning the previous Vattenfall grid in Germany. So it's the eastern part of Germany. It's including Berlin and it's like an island, the city of Hamburg and surroundings, as you can learn there on map 3. We have an ownership by Elia Group, that's the Belgium TSO since 2010. And we have the ownership by KfW since 2018 with a 20% ownership in our company. I would like to ask you page 4. Here is some more in detail the grid that we operate, and what you can also see on the top of the map there is that we are obliged to connect any wind farm in the Baltic Sea in Germany. As you learn there, we have already some offshore wind parks connected. These are the ones on the left, and we are currently in the construction phase of additional ones. I come back to this later. What is very specific in our region, Eastern Germany is not a very an area with a dense industry. So that is why we have a relatively low consumption of power. However, due to the fact that we have a lot of areas with very low population and a lot of farming, we have a high grade of renewables installed there, whether it's onshore wind. Meanwhile, also on out of greenfield PV, driven by the fact that we also have from the former Russian army a lot of training areas that have been owned by the military, and they have now been transformed into areas where PV greenfield plants are erected. Page number 5, please. I guess you all know what a transmission grid operator is doing. What we have a specific here in Germany is that we are also the trustee for the renewable energy law and its cash mechanism. So simply said, the subsidy mechanism for all renewables in Germany. Just to give you an idea, the overall size of this is about 25 billion every year. Our company has a share of about 20% in this. And so that is something that we have to steer and manage from the cash flow perspective. Page 6, please. What is typical in our region, as I've mentioned, we have an increasing and a relatively high level of renewables installed there. And that goes in line also, of course, with an increasing production of renewable energies. If you compare, for instance, 2018 with 2019, you see an increase of more than 10%, whereas the increase in the capacities addition has not been that much. The simple reason why is, and that is, I guess, a part of the climate change procedures we are all facing. 2019 was a very windy, a very sunny year, and we had the effect of really no snow in our grid zone, and no snow means that photovoltaic plants are producing power the whole year round. With this, we have reached a level of about 60% of the power consumed in our grid zone is covered by the production of renewable energies. Page 7. With this, we came up with an initiative recently to bring this level up to 100, what is of course very ambitious, but we think that that could be managed. Of course, it's not only on us, but especially on utilities, on investors to implement renewable energy capacities in our grid zone, whether it's onshore, whether it's especially, of course, offshore wind in this perspective. And we are very optimistic that we can reach this level of 100% by the year 2032. Page 8. This is a short overview on the onshore projects where we have, and this is also an issue for future green bonds, because offshore wind farm connection is, of course, something I would say relatively simple to give evidence that this is a absolutely pure sustainable project. Also, when it comes to the EU taxonomy, when it comes to onshore, it's a bit more tricky because on onshore we have no physical filter when it comes to the transportation of energy, whether this is a green or a non-green electron running through our lines. And of course, the impact in environment when we erect a new line, whether it's an overhead or a cabled line onshore, is by far higher than, of course, when it is on offshore. Page 9. This is a better view on the offshore grid that we are currently developing. So you see on the left side the wind farms Baltic 1 and Baltic 2 that are in operation for more than 5 years meanwhile. What is pretty new, and that was introduced a few weeks ago, is the so-called combined grid solution. That's the connection of our offshore grid with the offshore grid of Energinet DK from Denmark. That's the green line that's coming from the top left downwards. So it is the first interconnector from a grid perspective between two offshore wind farms and connecting two EU countries That was very well perceived also by the EU Commission, this project. Beside that, we have 2 wind farm projects out there, and that are also the ones we have chosen to be eligible under the Green Bond framework that we have issued. That's Ostwind 1 and 2. Ostwind 1 is meanwhile in operation. That's in the map the most right wind farm areas. And we now have Ostwind 2 under construction with additional 750 megawatt capacity in the Baltic Sea. Page 10. What goes along with this is, of course, a significant CapEx program. And what you can learn from the perspective in the future, it will increase. And that increase of CapEx is not only a challenge when it comes to finance itself, but of course, we are also considering how to do that. The key element of our funding strategy is the issuance of listed bonds. And of course, we were making up our mind how we ensure that we always find enough investors for the bonds that we have to issue in the future. And that was one of the key motivations also when it comes to the green bond activities. Page 11. Just shortly, we have 2 ratings out there, and they have been updated recently and or will be done very shortly. So it's a BBB+ stable outlook, what gives confidence in the investor space for several years meanwhile. And of course, it's our target to maintain this. And in line with this, on page 13, we have also been active with sustainable rating agencies. And there you can learn, page 13, please, that we are actively working with Vigeo Eiris and Sustainalytics, and we are also rated by MSCI. We are very happy with the cooperation, especially with Vigeo Eiris and Sustainalytics. And as you may learn from page number 14, we are improving the results that we are receiving in the ESG analysis process over the years. With Vigeo Eiris, we were working for the longest period, of course, starting at a not so perfect level in 2014. But I must admit, in 2014, this ESG rating issue was not really an issue where the company that worked with, and that has changed in 2015 when we really started a project internally on sustainability, on these aspects of ESG ratings and how to cope with that. And that, of course, did help to improve the levels that we have achieved. These days, a new rating from Vigeo Eiris will be publicly available, and we expect a further increase of the level for this recent rating. In parallel to that, we started to think about the green bond, and therefore we implemented in 2018 a first green bond framework, having in mind that we will need green bonds as one element of our funding, and also, of course, supporting the green bond idea that sustainable finance is a key topic for the future and is supporting every efforts on climate change and to fight climate change, of course. This ended up in the first green bond issuance, and that was happened in May this year. Page 15, please. You may ask why we went with a Cbi certification, as others, not all of the issuers are having one. As mentioned, sustainability is a key element in our strategy. And of course, when it comes to transmission grid, this is one of the key aspects also for the EU, or covered by the EU taxonomy, because without the grid, there's no transportation of renewable energies or their integration. As mentioned, we have a significant CapEx ahead of us, and that led us to the idea to widen our investor base to as much as possible. And of course, we have learned in regular communication with investors over the years that there are more and more out there who are really considering sustainable investments more than in the past, and especially in some regions like France, the Netherlands, we really have received regular questions. Okay, when are you going to issue something in green? We think that you are in a position to do so. We would be happy to invest in. So simply said, that was one of the key elements, of course, not only our own our position and our strategy, but of course also because we have understood from investors they would be happy to see something green by ourselves. We went for an SPO by Vigeo Eiris, simply said for two very good reasons. First of all, and that is a key element also when it comes to the issuance of a green bond, especially when it used the first time, because all this is a learning process. So far with Vigeo Eiris, we have the longest cooperation and really a good one. So when it comes to ESG process, but also when it comes to the SPO process, there was an interaction with the analysts. It was possible really to get into a conversation and raise questions, receive helpful answers. So it was really a good cooperation also when it came to the SPO. A second issue for us, because when thinking about the documentation, of course, a lot of the documents that we have and what we were willing to share with the SPO are in German. So if we apply, for instance, at the German Seeamt, so the official unit, that is the permitting unit for our offshore wind farm connections, all the documents are in German only. And we were afraid really to translate a 200-pager of applications, and that's why we selected SPO, Vigeo Eiris and SPO, because they have a German subsidiary, and simply said these people are able to read all these documentations if needed. The only slight disadvantage what we have learned also from investors, especially if not French-based, Vigeo Eiris is not so well known as a SPO provider to our impression in several markets, and that's why, and also because we have been in touch with CBI for many years, we came up with the decision, okay, we want to have a CBI certification to support the SPO and to give comfort to as much investors as possible. Page 16, please. That led to the issuance of our first green bond in May this year. So in the midst of the first wave of COVID-19. Nevertheless, it was a very successful transaction. It was the lowest coupon we ever were able to achieve. And meanwhile, we have, by end of September, an allocation of roughly 2/3 of the proceeds of the bond. And we are optimistic to reach a level of about 600 million by end of the year. So about 80% roughly of the bond. Page 17. The key takeaways for us of the green bond, and that really led to my own, so to say, commitment to do green whenever that is possible, is really that it was a very successful transaction in not so easy market conditions. As you see mentioned there, we have received really a strong feedback from investors when it came to the SPO, to our agreement framework, and of course the welcome to Cbi certification. The same day we issued were 3 other green bonds out there in the market. The first, however, for 6 weeks. So obviously all green investors were there that day, and they had, let's say, a good choice from various issuers that day. And a hope that really came true was that the pricing of this green bond went very well. So we were able to tighten for 40 basis points, and we priced inside our curve, what is really a huge success. And what was most impressive to me personally was we have received the highest order ever of 130 million by an investor in the UK. We know this guy for 5-6 years now. We are meeting him on a regular basis in our investor update. And I really called him the day after and thanked for his huge order that we have received. And he told me, yeah, it's simply also because you came out green. Roughly 80% of my order go back to dedicated green funds. And that really was kind of a proof of our considerations in advance that we are able to achieve a wider investor base on one hand, but also to get investors who know us pretty well to size up their tickets as we are out there in green. And to summarize that, we have 50% of the orders came from what we know, or the banks supporting us also confirm that are green or so-called deep green investors. We had 15% totally new names in our order book, but was also exceeding our expectations. What was interesting also, we received more than ever questions in the process of the book building, and 80% of these questions were green questions. So on issues, whether on the SPO, on the projects themselves, on the Cbi certification and things like that. And I would say the only slight disappointment that we faced was that we did hope for more activities or more orders from the Nordics, because we had the impression that investors in the Nordics are very keen to acquire green investments, and there the share was not that large what we did hope for. But if you see all the plus above, we can live with that. And of course, we will go for the Nordics also in the future, and maybe with more activities upfront in the marketing process. With this, I would love to close and thank you very much for your attention.
Thank you, Robert. Thank you, everybody. So now we have about 18 minutes for a good discussion. Again, our audience can please type into the Q&A chat box. I've noticed some people have typed specific chat messages to me. So that's fine. So I will verbally share them with our speakers. But if anyone else has extra questions, please type into the Q&A chat box so everyone can see the questions together. So thanks again so much for our 5 speakers today. I found that very interesting and useful. And I have some questions of my own. But I'm going to start with the questions that I have received in my chat. And I guess we'll start with the question that people always ask in these sessions, but that's okay. And I would like to direct my question to our colleagues at Natixis, please. So I guess this is maybe more for Julien, but the question is about the pricing. So someone asked us, what is the typical returns that a green bond issuer can get compared to a non-green issuance? Thank you.
Thanks, Carmen, and thanks for this question. I would say this is a few bips type of questions, not the $1 million question. Huh? It's but kidding aside, this is something which is being discussed in the market a lot. What we have seen, and this is, and Robert from Eurogrid just gave, I would say, a couple of examples, and we had as well from ENBW some concrete example. I mean, the green bond issuance or sustainable bond in general are, I would say, attracting lots of interest from investors. So in turn, then the pricing power really lies with the issuers. And what we can say now after a few years, and particularly for the, I would say, historical issuers, where you have sufficient, I would say, dots on the curve yields, is that one on execution day, you have a couple of bips for some of the issuers, especially the historical ones, which are thrown away as what we could call a greenium or some sort of a premium, because the pricing power is really lying with the issuers, given the, I would say, the very high oversubscription rate that we have constantly seen over the last few years. And I would be happy to listen to Robert and Regina and Robert as well on that topic. And when Robert mentioned that there was 15% new investors in his last issued transaction, this is something which is clearly paving the way for premium. And on the secondary curve as well, we are seeing some interest, but that's where you really need, I would say, some historical data. And after a couple of years now of this, where the market is really getting a standard in those for those instruments, we are seeing some green curve yield interest as well for the issuers. So it's hard to say. We would say a couple of bips, lots of, I would say, bond houses as Natixis are putting effort just to substantiate this and to, I would say, calculate. And what we can see is that it's getting a bit standard that few bips are just left on the table to the benefit of the issuers.
Thank you, Julien. A slight extension to that question is we always hear from the market that green investors particularly are always trying to buy more green bonds. Perhaps they have a mandate, an official mandate, or maybe they just informally would like to increase their holdings. So generally, we always hear that there is more demand for green bonds than supply. How do you see that perhaps progressing in the next couple of years with various shifts in the market or more labeling or something? Do you see that mismatch between supply and demand still there, or do you maybe see just suddenly lots and lots of issuers coming on and something like that? Or
well, I can just quickly answer, and I will hope that the gap at some point will narrow, as you say, with more and more supply. But still, I mean, what we can say is that there is still a very strong demand from the investor. And this has been, I would say, for the last few years, both big money players, I mean, the AXAs, the likes of AXA, Generali, Allianz, they've been really beefing up their strategies with concrete, I would say, thematic strategies and concrete commitments. Generally, AXA, Allianz, they are giving some, I would say, mid to long-term targets in terms of green bond to be, of course, bought by their few portfolio managers and strategies. And you see as well some green bond niche funds, which are active for the last few years as well. So overall, the demand is definitely there, and that will remain. So that is something which is a constant, I would say, constant trend in the market.
Thank you, Julien. I have a new question just coming in from someone towards ENBW. So I guess either Robert or Regina can take this as you like. The question is, so I'll read it verbally exactly what they say. I would be curious if ENBW notices a shift in client demand, sustainable versus cheap. What's your approach in own production, CapEx initiatives? Do you strive for financing all green projects with green funds, or do you also fund via normal sources?
Yeah, so I'll take that one. So I'm not sure if I understand it correctly. So please, if the question is not answered to full extent, just send a new one in of the parts not covered. Basically, we have been issuing green bonds in the past, and we have also been issuing just non-green bonds in the past. Our main strategy is going forward to invest heavily in sustainable generation and also in generation infrastructure, so grids. However, so far, we had no closer look at the grids part yet. As for the distribution grids, it turned out that is, and I highlighted it also in what I said earlier, that for the green bonds with the use of proceeds and where you have to do reporting on the impact, it is increasingly, or it's way more effort to report on small scale projects. And for our distribution grid, we had just a quick look in it and turned out that there are just a lot of measures and projects being implemented with like size below 1 million euros. And also with regard to what is eligible for a green bond, there is also has to be looked at very closely, because some measures are just not just because to implement the green for implementing renewable energies, for example. So it's on the one hand side not easy to see it. On the other hand side, it's just a lot more effort than to look into the renewable energy space, for example. So and for the transmission grids where EnBW is also active, the big capex intense projects are just about to come. So this is why going forward, of course, we are looking to fund as much as possible using green bonds, but there are ways the market develops that possible other sustainable finance opportunities might come up or might establish going forward. So I would say, we will try to issue as many green bonds as possible, but there might be one or another conventional bond going forward as well.
Thank you. Another question for EnBW, please, for Robert or Regina. So you have issued green bonds over 3 years now. How do you think the investor reception has changed? You briefly discussed this, but say you hadn't labeled those bonds, say you just had continued to issue unlabeled bonds, do you think you would have a significant difference in investor reception now? And also you mentioned that Robert mentioned that the reporting sometimes is a bit of a challenge in determining what metrics to set up. How do you think the investors have? So it's been a journey for everyone, setting up the reporting, and also the investors not necessarily always know what they would like to see. Different investors want to see different things in terms of reporting. How do you think that has changed over the 3 years? Has that been easier?
So first, with regard to development of investor perception or investor engagement. So basically, I think when we issued our first green bond in 2018, we were only the second German utility to issue a green bond. And back then, I think everyone was looking closely at the instrument itself. So focus were on the projects, on the process, on the framework, on how the green proceeds will be managed in EnBW. And for example, sustainability ratings of EnBW were just more or less like, okay, yeah, they have one. But this has somehow developed, and also Robert Weigert from Eurogrid mentioned it as well. Investors are now more and more focused on the overall sustainability of the company, and talking to investors, you get a lot more questions that really go into details of the sustainability strategy, on the ratings, on certain details and aspects of the business model with regard to their sustainability aspects. So this has clearly changed, and now I think the focus, even when issuing a green bond, is more on the company than it has been in the past. And the second one, with regard to the reporting, I would say, of course, at first, when you initially install all the or set up everything you need for the reporting, so the discussions with the controlling department and internal discussions on what you want to show to investors. Once you have conducted everything and set it up, you get a lot more routine and you're more secure, and also the market changes and you have more examples of other issuers looking at certain project categories that have not been looked at yet. So you get more secure there, and also it's not as time consuming as for the first initial setup. Yeah.
Thank you. Robert from Eurogrid, we probably have a lot of interest in this sort of question, but when you were you issued your first green bond this year, did you think the process was a bit complicated and difficult to understand, or do you think it was quite smooth and easy to understand how all the different parts fit together, the whole experience?
It's a good question. Of course, it was the first thing was really to prepare the organization within the company to make up our mind who will have to join this project, from whom we need reporting in the future. As we are an engineering company at the end of the day, of course, engineers are not always very do understand the easiest way what financial guys want them, and especially the motivation of us. So it took also some efforts to convince them and to explain them from the green bond product and the things that we will face now and also in the future. The process itself, of course, as I've mentioned, it was helpful to have a partner in our case with EMUC and Visio Iris on a second party opinion that we really were able to go through this. I've then received a few weeks before the transaction a huge questionnaire. When seeing that for the first time, I was a bit shocked, especially a lot of these questions were very technical. But I guess that is what also the colleagues from EMBW said. If you do it the second and the third time, you know you have to do where to gather the information within your organization. So indeed, the first exercise is always the most complicated one, but it's feasible. And we had a core team of 3 people. And an important one is also legal, because whatever you write down in the agreement framework and whatever you commit yourself, of course, is legally binding, and their lawyers also have sometimes a bit special view on issues where we financial guys think, okay, they are straightforward.
Thanks. Okay, thank you. Julien, another question for you. So when you speak to clients about potential deals, what are the reasons perhaps for that you would propose someone goes for a green label and certification? Are there some particularly for companies which are pure play renewable energy, such as just offshore wind developers or other similar pure play? Sometimes we get questions like this all the time, that they think it's not necessarily worth the extra effort. They already are 100% green. What's the extra value of having the label? What would you say to clients like that?
I would say first that the main rationale is definitely to put forward the sustainability profile. I would say the mid to long term strategy of a company, of an issuer in those I would say features, and that would be I would say a good occasion, including for a pure I would say green player, to present the overall I would say strategy on how it works jointly with the business development, with the equity story. And that's something which is definitely, and I think Regina mentioned that earlier on, and this is one of the key, one of the 2 pillars of such I would say a certification or such a standard that we would market to the issuers. The second instance is definitely the transparency and the impact reporting with the project, and to align and to scale up with the investors' demand. And again, the key, I would say, red line is definitely this demand from the investors, the various strategies, the various portfolios. We can see that these strategies are very matured in the green bond, I would say, world. This is getting organized around the social thematic as well, and especially on the back of the COVID-19 situation. We've seen a very fast developing social bond market, as you know, this year, which was really ahead of the pack this first and second quarter. So clearly, I would say the main selling point would be one, the profile and how it works jointly, and second, all the merits of the project.
Okay, thank you, Julien. We're gonna finish very soon. It is 30 past now, but we had one question for Stefan. So thank you, Stefan, for your presentation as well, of course. You mentioned some of the trends and opportunities that have been happening recently in various markets around the world. Part of this, I personally guess, is due to technology and also policy support and some other changes in the financing structure. So the costs for offshore wind have come down massively, and they have always come down quicker than all previous forecasts. For example, IEA always have a certain forecast for some year, and then the real world installations always beat that forecasts. Do you see, or I'm not sure if this is a difficult question, but do you see anything that might come on into horizon that are unexpected that would even more accelerate rollout of offshore wind? Some aspects that you might hope to see either in technology or policy or market mechanism?
No, definitely. Though I guess one aspect I didn't mention is that major cost reduction is also allowed by another key trend in the sector. It's the deployment of a massive capacity scale wind turbine. I guess the first projects are in the pipe, are undergoing financing and market sounding, but those mega scales turbines, 12 to 15 megawatt, have also allowed prior auctions to become very competitive. I guess in terms of disruptive trend that could further affect this, I mean, we have yet to see and we monitor cautiously what value add entry of oil and gas companies with significant expertise in terms of marine installation and operations of marine installations could further bring, and what synergies they could bring when they join the market. And they very also often partner with utilities and regular offshore wind players. And I guess the next step, disruptive step, and that's also utilities and oil and gas companies have this in mind, is what aspects offshore wind would bring. It's already a very stable generation profile, but it's still a bit intermittent. What could it bring when it's combined with a technology that may allow it to become more baseload and much more demand profile? And we're thinking the prospects of combining offshore wind generation with hydrogen electrolysis offshore with appropriate infrastructure to transport hydrogen could provide a very interesting baseload or even more baseload profile to offshore wind generations when combined with storage, and with very interesting reach out in terms of end use when hydrogen is being produced, which would not be limited to power generation, by the way, but would have all the multiple end use prospects for hydrogen in the transitioning environment in terms of mobility or industrial applications. So that's a 5 to 10 years trend that we should expect could strongly modify the offshore wind industry as a whole.
Thank you. And a follow-up comment about Stefan's comment earlier about oil and gas companies entering this space. Maybe this is for Julien. How do you think the market will receive if oil and gas, either a smaller player or perhaps a major, were to issue a green bond for an offshore wind project or something like that?
Well, the market is a lot more mature now than a couple of years back, when one of the first issuer, as you may recall, in the oil and gas, Repsol did issue a green bond, which was discussed, if I may say, in the market. I think this is more related to a topic that you know very well, Carmen, at CBI, and it's pretty new as well. This is all around the transition topic. And this transition topic is, I would say, a larger topic, and will capture and will embed, of course, these oil and gas company, which lots of them, especially in Europe, have announced concrete targets to reduce, I would say, their carbon footprint and to diversify. As Stefan mentioned, they are going to be, I would say, key players in that respect. So the market, again, is very organized in a pure green bond instance, right? But in the transition, they are getting organized definitely on that topic. So we don't see, I mean, I would say, much constraint in that respect, more opportunities in a way.
Thank you. And that's a good link to one of the other questions I received in the chats about whether CBI will provide certification or work with transition bonds. This is something that we are working towards. We published a transition white paper in September. This can be found on our website, but we wrote it in conjunction with a few other stakeholders, and we published that in early September. And we got a lot of questions about it. We got a lot of attention about it. We're trying to lay out what we think about transition and companies such as oil and gas companies, but other high emitting companies as well. We are probably going to set up a certification-like scheme for it. But at the moment, we haven't confirmed anything yet, so we can't announce anything publicly. But we will definitely share more about it as we decide something, perhaps at the beginning of next year. We'll move to the last question now. We're a bit over time, so thank you for staying. Someone asked in the chat about what the issuers think about the increased proliferation of standards. Obviously, the big one is the EU taxonomy. I will say something briefly. The Cbi certification scheme is working towards how we can overlap with the EU taxonomy. At the moment, for sectors such as offshore wind and most renewables, we are pretty much aligned. We use the word aligned to say that we are aligned with the EU taxonomy. There are certain aspects that we are still working on, for example, the do no significant harm aspects. But that is something that we will finalize soon. The EU taxonomy is finalizing their criteria for sectors such as renewables at the end of this year. And so soon after that, we will come out with what we are proposing in terms of our overlap and alignment. But if we could turn to one of our issuer speakers who would like to speak about how any plans they have with regards to reporting that they need to do. So with the EU taxonomy, and the person in the chat also mentioned the ISO's proposed standard, which I think it's not coming out anytime soon. But if you have been doing the work around that, so either of you want to speak about this?
Yes, I can briefly refer to the EU taxonomy. I mean, we ourselves are looking into detail into the EU taxonomy currently. I think it will be a very important tool. So definitely investors are currently looking at the EU taxonomy, and also companies are. So I think there will definitely be a need to integrate the EU taxonomy requirements in SPOs and also in standards such as the CBI, as you just mentioned, Carmen, because I think this will be an important tool to measure the impact of the company in the future. So I think this will definitely be a standard. We can't get around it, and we don't want to. So we are looking at it ourselves, and I think there will be quite a dynamic movement already next year. With regard to the other standards, the Asian standard and also the ISO, I can't really tell much about that, because currently our main focus is really on the EU taxonomy and how to integrate it into our own assessment with regard to our business portfolio, but also with regard to green bonds, of course.
Great. Thank you, Regina. So I think we will stop there. Thank you, everyone, for attending our event. And again, thank you for all our speakers today for donating their time very generously. So thank you, everybody, for coming. Thank you. Thanks.
Thank you. Bye.
Bye. Bye, everyone.
Everyone, thanks, Carmen.
Thank you. Bye.
Bye.